if you look at these numbers here, what this means is that at some point during the day, price went up. And when price went up this morning, a whole bunch of call buyers showed up and said, I'm going to buy the 87, 88, 89, 90. And some more bought these two. So they buy it bang and bang and bang. Okay? Then the markets also kind of do this. And so you got a whole bunch of put buyers that go, I'm going to buy puts because I think the markets are going to go down. So they buy bang, bang, bang. 87, 86, and 85. So if I'm the market maker and I have to arbitrage between these two, and these are all out of the money, okay? These are out of the money calls, right? And these are out of the money puts. Prices here. So just watch this, guys, okay? Remember I said no comments? I mean, I like hearing success, but just try to watch this. If price, for whatever reason, shoots up like this, all these out of the money calls will be in the money. And guess what the market maker may have to do? May have to deliver all those shares. Those tens of millions of shares will have to be delivered to those call holders, right? So if you had a 588 call and price went up to 592, you might say, you know what? I want to exercise my call. I want 100 shares of the SPY at 588 because it's at 592 and I think it's going to go even higher. So the market maker has to say, oh, okay, Michael, you want them? Here's 100 shares, 588, gesund, okay? And if the market maker doesn't have the shares to give me, guess what the market maker has to do? He'll have to buy them at 592 and then give them to me at 588. Well, that's not going to happen. So what the market maker does is buy up stock. When there's a lot of out of the money calls, they start buying up a lot of stock, and that shoots price way up into this range. Why are they doing that? So that they have the stock just in case it goes gazonkers. But if it doesn't go gazonkers, what do you think the effect of riding that stock up by buying hundreds of thousands of shares of stock, what do you think that does? What do you think it does to all the put holders? If you're sitting on a 587 put and price starts driving, or 586 or any one of these, right? 580 and a 585 put, and price is going up through the roof because the market maker is pushing it. Yeah, you're going to sell them. You are going to dump those puts. You're like, oh well. And you'll dump them. Not everybody dumps them, but many of them do. And as soon as the market maker gets feedback during the day, which we don't have access to, feedback as to how many of these puts are still alive. When he determines that there's not that many of them alive to really worry about, guess what he decides to do next? Dump the shares that he bought. Well, why would he do that? Because if he starts dumping shares, it'll drop the price. It'll drop this. And if that starts dropping, what do you think the people that are holding on to the 588, 589s, and 590 calls are going to do when price starts dropping $1, $2, $3? Yeah, they're going to dump their calls too. So this is a game that the market maker plays when they spot a whole bunch of this and a whole bunch of this. They move the market right up to the line here where those calls are, where those puts are. So they'll drive price up to get rid of as many of those as they can. and then they'll drop it back down to get rid of as many of these as they can. And they'll determine at the end of the day, where is max pain? What is max pain, you might ask? If I could drop the price right there, how many puts out of the money will expire worthless? And how many calls out of the money will expire worthless if I can drop it right in that little zone? And that is what moves the markets. Now, price goes up, the retailers jump in because they think price is going up. Then they get killed. Price goes down, the retailers buy puts because they want to buy where they think it's going. Market swings up, they get killed. But if you look at this, let's do a 5-minute chart so you can really see that there is no such thing as consolidation. I mean, yeah, look, consolidated, right? Wrong. Does that look like consolidation to you? So check it out. Look at this level that I drew. This is 589. So what does the market do? It goes up, boom, like this, and a whole bunch of 589s and 590s get bought. Then the market starts to drop like this, and then the put buyers come in and they go, ooh, 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 let's buy 585s, let's buy 584s, let's, whatever, let's buy 586 puts. Ooh, ooh, ooh. But then when this happens, a lot of those puts leave. But then the market dumps like this because there's as this is rising, you're getting more calls. When the calls show up, the market goes, not so fast. I'm dumping. Boom, he dumps. They start leaving, more put buyers show up. So if the put buyers are sitting right here at 586, which I showed you, 585 and 586, is it a coincidence? Look at this, 586. Look at that. Is it a coincidence that the markets rebounded off of that level? Well, of course not, because if you look at the options chain, you'll see all of them sitting at 585 and 586, right? See how it drops off here at 584? So what? These are the ones they have to be concerned about. At what number? 585, 586, 587, right? So if I go over to the chat, there it is. 585, 585, 586, and 580. Here's 587s. Here, 6 is about here, and sorry, 6 is here and 5's down here. That all of that. And when you see this move to the upside, that's when all these puts, not all, but many of them get scared out. And this just goes on and on like this all freaking day. That's what the market maker does. And boom, boom. Look at this. Boom, boom. Almost, not quite. Almost, not quite. And then, boom. Right there. 586.13. So if you look at the options chain and see where the price actually landed, 586.13. Who is not getting paid? Well, I can tell you that the 586s, these 586 puts, are not. None of that gets paid. And most likely, enough of these got scared out when the price moved up. 586.13 means that the 587s and the 588s, this was the largest concentration right here. Everybody see that? Do you see how that's the biggest number on the board? 660,000 at 588. Well, guess what the 588 calls and the 587 calls, guess what happened to those two? Guess what happened to this big chunk? A million, 1.1 million right there. Options. Well, they expired worthless because the market maker finished right here at 586. So all of this done. And all of this done. Expires worthless, expires worthless. All that's left is this measly bit of volume here and this measly bit of volume here. Those are the only ones that got paid. No sweat, because these are all got destroyed. And this is what the market does. Maximum pain. How many put holders can I destroy by the end of the day? How many call holders can I destroy by the end of the day? And land price right in the middle. Cool, huh? Yeah, I mean the market went up after the market closed. It went up after that, or went down after that. Let's see. I mean, you could nitpick all you freaking want, but let me look. I mean, the market right now, the market is 586.13. So the market closed. The market closed here at 587.55, but then it continues on. It continues on. You see, these are still alive. In fact, you can still trade the SPY after 4 o'clock. You just have to put GTC. So, how do you make any money? Well, there's lots of ways to make money. Watch what the market maker does, know when the swings are, look at the options chain. Kind of a silly question. We have a methodology on what to look for and what to look at so that we can create setups. If there is a setup, then we can look for confirmations of that setup, either in the options chain, either on price action or other indicators, which I'm going to go over. You've been around for a little bit, Taterhead. You've watched these live sessions. You've seen the alerts. So, I get the question. If the market maker is manipulating, how do you make money? Do you think there's any gamblers in Vegas that walk away making money? Do you think there's any poker players that make money over the course of the year, win some, lose some, but come out ahead? Think there's any professional gamblers whose equity curve looks like this? The answer is yes. Is the casino rigged? Do they have the house advantage? They do on just about every game on the floor. And yet there are some people that still know how to manage and are professionals. And that's what I teach you to do. I just talked about the gamma squeeze. I literally just showed it to you. So all in, you might want to rewind and listen, but I just went through what that is. If there's puts sitting here and there's calls sitting here and there's a tremendously more amount of calls here, what can happen is that the market maker will have to pump the market and get squeezed into pushing it higher and higher and higher. Open interest is a waste of time because it doesn't mean anything. The only thing that matters is the volume. Look at the open interest this morning on the 588 calls. It was 12,000. Does that mean it? Look, it was 13,000 at 600. Does that mean anything this morning? No. What matters is the volume that's coming in. And so that when you want to make a decision as to what you want to trade potentially, it's a good idea to take a look at where the market is sitting. Open interest can be helpful. It can be helpful. When picking a strike, if you see that there's a ton of interest at a particular strike level, yes, you can do that. But what I'm referring to are the ebbs and flows of today. This is 0 days till expiration. This isn't next Friday. This isn't the week after. This isn't monthly. This is just today's expiration. What I'm trying to do here, ladies and gentlemen, is to explain to you what this means, why this swings the way it does, and what it means, and how you can also look at price action and look at the options chain and see where the pockets of volume are.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.